One of the most common questions I get is, what is the best trading strategy that you've tried? And after 12 years of trading, this is the winner hands down. Now, this strategy is simple but not easy, but today I'm going to try to make it easier for you. But before we get into any of that, I wanted to remind you that spots have opened up for the free one-on-one consult with me. Click on the link in the description for more details on that. And without further delay, let's get into it. How's it going, guys? Welcome back. My name is Prince, and today we're going to be talking about the trend trading strategy. Now, this is a very popular strategy. I'm pretty sure you've heard of it if you've been trading for a while. But today I'm going to dispel some myths and mistakes that people make when they're trading this strategy. Now, I do trade against the trend sometimes. I'm also a trend continuation trader. I'm a counter trend trader. But the easiest one for especially beginners is just to follow the trend. The trend is your friend. I'm sure you've heard this before. Now, to exemplify this, I'm going to show you some trades that my clients and I took this month. Show you our thought process, why we got in, where we got out, and the reasons why we did what we did, essentially. So let's get into it. All right, guys. So right now you're looking at the Kiwi CAD chart, but before we get into this sweet lovely trade that we took here, I wanted to break down first how we identify the trend, right? Because we are looking at a trend continuation, trend trading, right? So to be able to identify a trend trading strategy, we first have to be able to identify the trend. When I'm looking for a trend, I'm looking for a couple of things. I'm looking for higher highs, and higher lows. And if we are bearish, I'm looking for lower highs and lower lows, right? So I'm looking for the market to put in a push and then a retracement, and then another push and then a retracement. And if we're in bearish market, I'm looking for, again, a starting point. I'm looking for a push and then a retracement, then a push and a retracement. Now, very, very important, you have to identify these trends on your highest time frame. So if you happen to be a swing trader like myself, I do identify this on the daily time frame. So sometimes I go to the weekly, but usually I'm able to identify what's going on when I scrunch up the chart or when I go to the higher time frame. What do I mean by scrunching up the chart? Like if I was to take this chart right now and I zoomed into it, I zoomed in really close, right? Let's say I zoom into the hourly. It's very difficult for you to tell what's going on because you're so zoomed in, right? There is no peripheral vision. There is nothing else to see apart from what you're seeing right now. You need to have more of a bird's eye view, right? But if you were to zoom out into the daily chart, for instance, or you were to like scrunch up your chart, you were to like zoom out, it's a lot more clear what's going on here. If someone was to ask you, is this market bullish or bearish? 99.9% of the time, you can tell me that this market is bearish. Why? Because again, you can see we have exactly what we have. We spoke about before. We have a new structure low, right? A lower low, and a lower high, and a lower low, and a lower high, and a lower low, and then the rest is history, right? So that's exactly where we are now. So when you go onto the daily chart, or if you're a day trader, you go onto the hourly chart, what you're looking for is the trend. What you're looking for is these very obvious moves. And if it's not obvious, I'm going to show you examples of that as well. Or perhaps sometimes when they're not obvious, then maybe there's not a trend. Maybe you're in consolidation, in which case you don't trade. Or you don't trade that particular strategy. There are consolidation strategies out there, but what we're focusing on today is a trend trading strategy. So looking at this example right here, you can see that the market is clearly bearish, and I'm going to show you why we took this trade right here. So there's a reason why I picked this example, because this chart is very clean. The movements are very clear. You can see the higher highs and the higher lows. There's not very volatile. Market kind of gives you what it's looking for, and then you just take it, right? I'm going to show you a clean example, then I'm going to show you a dirty example. So you have to be able to adapt to these environments, right? So as soon as you've identified what the market is doing, so you've identified what the trend is, the next thing you need to identify is where is market most likely to reverse. Now, this is where support and resistance comes in. Some people call it order block, some people call it supply and demand. It's the same concept. I'm sure someone's going to argue in the comment section that it's different, but for me personally, it's the whole point of figuring out where to get in is, where is everyone else getting in so I can get in with them, and where is everyone else getting out so I can get out with them. The technicalities of it is irrelevant. You just want to be able to get in with the crowd and get out with the crowd. Okay, so So for this particular example here, I've identified a trend and I've identified the zones where the market is most likely to reverse. The first zone, the market is most likely to reverse. Technically, the market can reverse anywhere in here. The market has put in a new structure low, retraced, new structure low, retraced, new structure low. It has every right to retrace anywhere into this zone. So anywhere in this zone, the market can choose to retrace and reverse. I'm looking to take the highest probability trades that gives me the best return on my investment. What does that mean? That means I wouldn't be looking to take a trade in the middle of a trend, in the middle of no man's land. I'm looking to take a trade at the most extreme levels. So how do you identify the most extreme levels? Well, the easiest way is at the tippy top end, or the tippy top end of the trend. So when you see the market retrace here, and then it moves all the way back, you can see in this example here, we could have taken the trade right here, but there was no reason to have done that. You see, the market is kind of like in no man's land. It's kind of like halfway through the retracement, and then it decided to go on its merry way. So the two ends I'm looking to take a trade is the lowest part of it. So the new structure low, the end of the new structure low, and the end of the outside return, or the end of the retracement. So that will be this here. Just put an arrow in here, and at the end of the outside return. So in this particular example, nothing happened in here, and we're going to be talking about reasons for entry later. But if I didn't get my reason for entry in this space right here, the next area I'll be looking for is for the market to retrace all the way back to the other end. This accomplishes two things. This is where people talk about order flow and order blocks. This is where the most selling pressure is. And this also gives you the best risk to reward. You can see if I took the trade anywhere in here, my risk to reward, which was a 4.5 to 1 almost, reduces now to less than that. Now, we don't want that. We want to be able to take a trade that gives us the best chance of winning, but also gives us more, for our efforts, right? Now, so market has retraced into this area here. Now, this is where the question comes in. Well, how do we get in? Now, if you notice on the daily chart, this is a very clean trend. Now, this is where I wanted to pay attention. This is where people make a lot of mistakes. They identify the wrong trend. So there's a reason why we identify a trend on the daily, so we don't get confused. Again, remember, when you go down to the 1 hour time frame, your view is kind of warped. You need to be able to have a bias and say, okay, well, this market is bullish on the daily, so I'm going to stick with that and only take bullish trades. Or this market is bearish on the Kiwi CAD on the daily, so I'm only going to look to take bearish trades. You can see on the daily, this is a very clear bearish trade. But something funny happens as soon as you drop down to the 1 hour chart. All of a sudden, now that clear trade starts to look a bit wonky, right? You see what happened? This very clear trend that we drew in earlier. All of a sudden, now you're looking at this area here. Now, this happened to me. This happened to a couple of my clients as well. They got confused, like, Prince, well, what about this new structure low and this outside return here? Well, what about this clear trend here? When you identify a trend on your hourly time, on your higher time frame, you need to stick with it, because the market will try to throw you. It will try to confuse you. Now, we've identified a trend on the daily, and now we've accepted the fact that any trade that we take will be a bearish trade. So all I'm waiting for now, I don't care what happens in between here and my entry between here and here. All I'm looking for is for the market to retrace into this zone and to give me my reason for entry. That's it. And in this case, my reason for entry was the double, because I used the double top, or I could have used an L3C candle, and the RSI was also overbought. I'm not going to talk about stops and targets today, but again, just today, actually, I'm just going to quickly brief it. So my stops always goes above my entry, and my target always goes just before the newer structure, the previous structure low. So you can see the previous structure low was here, and my target was just before that. I want to get out before everyone starts panicking and selling, right? So essentially, you can see the market very, very easily got into that zone. Most people would have mistaken this as a bullish trend, but you can see the market came in that zone, gave us exactly what we're looking for, reversed, and it was a very clean 4 and a bit to 1, 240 pip winning trade. So the previous example I just showed you was a very clean example. It was a very clear, concise one. Now, looking at Kiwi yen, it gets a little bit more murky, right? So, just like we discussed in the previous example, before you do anything, because something happens to traders, they get too emotional and they start to doubt what they believe is true. And this is quite normal in every aspect of life, especially if you haven't done something for long enough. You will have doubts. You will start to have imposter syndrome, and you will start to doubt what you know, what you've written down, and that's why you always have to follow a route, right? So that's why I say to people, I say to my clients, always look at the daily chart. Whatever you see on the daily chart is what is true. So you look at the daily chart, or you look at your higher time frame chart. If you're looking at the 4-hour chart, for instance, I know a couple of you look at a 4-hour chart. Well, let's assume you're a day trader, and your highest time frame is the 4-hour chart. Now, if you look at this chart here, you scrunch it up. It's not very easy to tell where the market is going. Now, imagine that anything from here right hasn't happened yet, because this trade is already long gone. We've taken this trade and closed it, but this is just in hindsight, right? So imagine nothing has happened from this area here all the way left. There hasn't been a breakout to the upside. It's just like from this area to this area. Now, if I told you to scrunch up this chart and tell me, well, is the market bullish or bearish? It's very difficult to determine what's going on here. But what you can do is, again, there's two ways that you can do it: scrunching up your chart and then just drawing it in manually. If you look at what's going on here, based on the example I showed you previously, how we draw in a new high and a retracement. If we just start from here, we have a move, and then we have a retracement. And instead of getting a new high, we kind of get a lower high, and then we have a retracement, and then we have the same high again, and then we have a break to the downside, in which case now we are bearish. And then instead of having a new high, we kind of have a retracement, and then we have a higher low, and then now we have a push again. Now everything in here is telling me that the market is bearish, it is consolidating, because you can see there hasn't been any new lows or new highs. Market just kind of pushed, and then we have a move here, and then a move here, and then a move here. No highs, no lows, just kind of like moving within a range. You can see the range until finally we broke to the downside and got in bearish. And then when you have a bearish trend, you're supposed to have a new low, right? So, but that hasn't happened here. Instead, what happened is that we got a rotation almost immediately. You can see a new structure high. Well, at this point, we didn't know it was a new structure high until we had this 1, 2, 3 move. Now, if you go back to the example I drew in on the black chalkboard, in the first couple of minutes of the video, you will see how I said if you have a new structure high and an outside return, this kind of movement here, this is essentially your trend starting to happen. Now, if you look at this example here and this example here, they're looking kind of similar. So you can determine that, okay, well, the market is kind of showing me that it's probably going to move to the upside at this point. So I'm going to look for a reason for it. Right. So the market broke to the downside, retraced, put in a higher low, broke to the upside, and then came back down, right? So now, because I'm a swing trader, I'm looking at the low, I'm looking at the higher time frame to determine the trend, but then I'm dropping to the lower time frame, which is the hourly chart, to find the reason for entry. Now you can see this is the trend that broke to the downside, and then we put in a new structure high, outside return, new structure high here, outside return, and then a new structure high, then an outside return. Again, this is a little bit more of an advanced trend trading strategy. If you don't find this, again, you can go back and watch this video as many times as you want. But pro tip I want to give you again is, if you don't really understand what's going on the chart, if you're not quite sure, if it's like I trade this because I've been doing this over 12 years, I know what to look for. I know what the market is. I know all these currency pairs like the back of my hand, right? Like I know how they move. So I can take trades that as ugly as this one. Now, remember I told you this is an ugly trade. The first one I showed you was very clean, no doubt about the reason why I got in there. But this one is a little bit more nuanced, but it is still a trend, right? So I just wanted to put that in there. If you don't think that this is something that is clean enough for you, by all means, just take the clean ones. There's nothing wrong with just being 100% sure of what you're doing, right? So, but I just wanted to show you that sometimes the market is not clean. And if you want to get into the advanced stuff, then this video is for you. So you can see market retrace back into that area again. We have a very nice clean trend inside the consolidation. Let me just draw it in one more time. Right there, retracing back into where? The extreme retracement zone. You can see if we go left, you can see it's been tested here. It's been tested here and then tested here. And then again, market came back to test it again. RSI was very, very oversold. And, final lesson on this pair, how long did this trade take to close? Well, let's do the math on that one. So I entered here on the 15th of August. Right, and this trade did not close until the 6th of September ish. So that's over 3 weeks in a trade. If you don't have a trust in your strategy, or if you don't have a trust in any trade that you've taken, it is very, very difficult for you to sit in a trade for that long, because every second of every day, every minute, every time you go to bed, you're gonna be thinking, should I get out of this trade? Should I stay in it? Because if you don't think this is a trade you should be in, you're just depleting your emotional capacity. It's very, very easy for you to get into a trade you trust and just forget about it. But if you don't like the trade, if this is too dirty for you, do not take it. So it is not worth the headache. So remember, the simplest ways are always the best. The best trading strategy for me is a trend continuation trading strategy. There's a lot of ways to trade, but just find the easiest one for you. But this is just me personally. I've been doing this over 12 years and I'm coaching for a long time. People usually find this the best because it is very heavily traded. And if you know how to trade it, it is very, very, very profitable. You just have to know what is the right trend, which trend to pay attention to, and what to ignore. So guys, that is the end of the video. Hopefully you enjoyed this. And again, if you liked it, drop a like. And if you have any questions, drop it in the comment section as well. And again, just a reminder, if you want to speak to me one-on-one, click on the link in the description and book a call and we will have a chat. So guys, that is the end. I will see you in the next one. Peace.